Hello YouTube, welcome to the second video here on the from.end YouTube channel, and we hope you like the first one. This video is going to be on QTUM paired with US Tether. So I just want to say that I personally did not take this setup. So what happened was a community member who is not a from.end premium member asked us how we trade, how we find setups, kind of describing what we look for, what we're trying to find when we enter and exit trades. So instead of just giving him a quick example, maybe a little snapshot of a previous trade, what I decided to do is give a full breakdown of a potential trade that could have been taken. I was asleep when the entry signal was actually coming into play, so I didn't take it, just want to point that out. But this was still a trade that I would have taken if I was awake, but due to the nature of the cryptocurrency market being a 24-hour market, we traders in the crypto market can't take every single trade. Obviously, if you're a long-term swing trader, you'll be able to take trades kind of every single time because you have so much time to enter and exit. But if you're a short-term swing trader or an intraday trader, you might have a little bit more troubles making sure that you're going to enter every single time if you see a good setup, because sometimes you have to wait just that extra couple hours for the price to really come to your area of sensitivity. And in that time, you could be really wanting to go to bed because you want to wake up early to attack the market the next day. So obviously, you don't want to take away your sleep for too many days. It just affects your trading too much. So definitely having the right balance in life as a trader is important. So let's go on with a real quick overview on the Discord, because I did talk about it on here before going into the charts on TradingView. So real quickly go over this. So on the weekly, last Wednesday, we did initially talk about this pair. We did say that we have increasing volume. If we look here, that's very good for the potential bulls on the very long-term price action look of things. On the shorter-term time frame, obviously we're not going to play the weekly into the potential of either short or long because it's such big candles, but when we get into the smaller time frames, I'll give you reasons why we shorted. So then we broke it down on the daily here. So the key level that we wanted to look at is the resistance. We see a double bottom right here, very key zone. We see it being used as a resistance. Support, we see it being used as a resistance support over here, and then a support and a resistance. So we can identify that it's a key zone on the chart. When we go even to the smaller time frames, like the 4 hour, we can see that even in the consolidation, we have very clear highs and lows, creating a sideways channel. And we see the resistance right here, and we see the support right here. Very, very clear zones. And then when we break it down even further to the 1 hour, we see that there is an ascending trend line connecting the lows here. And then we see a nice little ascending triangle up here because we see a horizontal zone that is a supply zone. And then we see higher lows squeezing the price towards the apex of the pattern, which is right here. And that creates an opportunity for us because if it does break down, we have a lot of room before we hit our near demand zone. So that is the overall trade setup. I'm not going to get too into it, but now let's jump into the charts. So this is the weekly chart for QTUM paired with US Tether. Now we see that it got listed on the Binance exchange in March of 2018, and we see that huge fall down after Bitcoin fell below the 6K zone, which would probably be around here. Now it might be a little bit hard to see right now, but if we change the price action a little bit and make it more presentable for the recent price action, we can see that it has created a very perfect support. Now this is it right here, and it's around the $1.50 range, right around there. And that is going to be our very key level of demand on the larger time frame if the price does come back all the way here. So if the price actually does come back to around from the $2.30 range all the way to the $1.50 range, we're definitely going to be looking for potential longs. Why are we looking for longs? The first reason is we've seen that $1.50 range has been a very key level of support in the past where buyers have been buying it. 2, we see such an increase in buy volume that if it does come back to the support, I would find it very hard for it to pass just because of the current supply and demand. Just look at it. Look how much buy volume there is compared to the sell volume. That looks like it's very unbalanced in terms of the supply and demand. And just by looking at the comparison green versus red, we can see that obviously there's a lot more buy volume than sell volume. So that means that if the price does come back to this zone, again, we have a higher percent chance of it bouncing than breaking by looking at the volume, which is in accumulation, not distribution. So when volume's in accumulation, investors and traders are buying and holding the asset. Whereas if it's in volume distribution, the investors and traders are selling and distributing the asset into the marketplace, not trying to hold it. So this is looking bullish on the long-term chart. Keep that in mind. So let's go and select one other key level for us, which is going to be this zone here. Now, what we can see here now is a potential double bottom. We have a first key bottom right here. We tried to break the recent high of the structure, which is the $5 range right here. We rejected really hard and came right back down to the low, which is going to be that $1.50 range. Now, what we see right here is the bounce from the buyers, but we are seeing a rejection, and that's what we played off of, is a rejection off of the bounce. And obviously, we will get into that on the smaller time frames, but I just wanted to describe the bigger time frames right now. So looking at the weekly, I would say the market structure for this current price action is going to be sideways. Now, if it was less buy volume in this market, I would say it still has a bearish sentiment because yes, we are in a consolidation zone, but I could totally see it push below this current structure low and then make new lows. But because we see so much buy volume and buy activity in the market, I think there's less chance of the price breaking to the downside and a greater chance of at least some level of consolidation to the side before we could even see it move up or move down. So that is my bias for this potential trade going into from the weekly into the daily. So let's move now from the weekly to the daily. So when we zoom in from the weekly now to the daily, obviously the volume has changed, but look just how much RVol there is. RVol is relative volume, meaning there is more volume in our recent price action than we saw in the previous price action. This is what we want for active traders who are looking for volatility, looking for price movements, because that's how we make money as traders. So we see that huge rejection at that $5 range. That's something that we really want to keep in mind when we are looking to potentially long if it does go back up. But obviously right now we are still underneath a zone of resistance. But just the $5 range, we really have to keep in mind that it is such a key zone for sellers to be located. We see that there's a lot of sell action right around here back in September of 2018. And then we see a lot of activity in here with buyers and sellers both really trying to push and pull the price back down. We see that there's a lot of volatility moving up and down, and then we do see a pennant here where we see lower lows and higher lows, creating a squeeze in the price, and the price has to make a decision. What did it make? It made the decision to go down, and once we saw that decision to go down, we can then short the market because we've seen back here that it has been a very key level for us in the $5 range. So let's go to the near price action here and try to find our key level of supply and demand. So we can see right here, we have a very key level of supply and demand right at this zone because we see it being used as a previous support, previous resistance, support, resistance, resistance, very key zone. We can see one right here, although it doesn't really matter too much here because we're only really playing with the consolidation here. But let's just draw in our key zone, which would be around here. We see a resistance right here, resistance right here. And it does get a little bit more messy around this zone because we see the whipsaw action around here. But then these resistance right here is going to give me a confirmation that this is going to be a very valid zone. Now, we see that the lines here are pretty even together. That's what we're looking for our key levels of supply and demand. But let's zoom in just a little bit more into this zone here, looking at from the daily into the 4-hour time frame. So we see our key levels right here, but then we can also see that within our consolidation zone, we have two zones where we are bouncing off of. We have the resistance and we have the support. So let's draw in our resistance and support by using our rectangle, which is going to be right here. And we have also a demand zone, which is going to be right here. And let's draw that green because it's going to be where buyers are located. And then we have our red zone, which is where sellers are going to be located. So this is going to be the structure of our potential trade. Now let's zoom back just a little bit further because we have identified that zone. And let's take a step back. We see that we have created our lower lows and lower highs, and we can even connect a potential trend line with them like so. So it creates a nice clear zone that we can identify. This is where it broke right here, and let's make that red. So it has a descending trend line that broke, very clear indication of a break, and then we see the continuation impulse move to the upside and then hitting a very solid resistance. This is a very normal trade outcome after breaking a descending zone on such a strong level of support. So we do see the impulse move up. We are seeing just in terms of price action, momentum to the upside because we have hit the bottom twice, and then now we are at the resistance where it's going to make a decision to either move upwards towards the $2.70 range or come back down to its support and get rejected by the sellers. So that is the two decisions that the market could go. So we did say that there's a lot of buy volume on the weekly, but now looking at the 4-hour, look how much sell volume there is. There is a ton of sell volume and really no buy volume at all after the initial spike. So this is telling me, yes, we do have buyers in the area when we do see a break and resistance, but just look how much sellers there are compared to the buyers. This is minuscule compared to the amount of sellers. This is telling me that the volume is in distribution 100%, and there's not really any traders or investors looking to hold it, and a lot of people are trying to get out of the pair. So this for me is a bearish sign. Also, just looking at how the impulse push ended, we see a huge wick protruding out of the body. This is indicating that there is strong level of sellers pushing the price right back down. We're not seeing the price hold a high and then slowly consolidate back down. We're seeing a pump and then a huge rejection right back down as low as it can, and then the buyers are finding the low right here. But this is, for me, an indication that there's a strong level of sellers, and combine this with the sell volume is giving me a good confluence for potential sellers compared to more buyers. So these are potential zones of confluences that I could look at in order to validate my potential thesis for a short trade. So let's move now from the 4-hour to the 1-hour. So we can even see the zones more clear. And just looking at the risk reward of the potential trade, let's just draw in our short position and see what we could potentially pull from this trade. So from supply zone to demand zone, we're looking at around 10 or 11%, which is a really good solid trade. Now, this only is in relation to our risk, right? Because we have to have a sound risk reward strategy. So if we look at the potential risk reward, just objectively, not actually looking at entries, we see that the risk reward could be anywhere from 3 to 4, which is a phenomenal risk reward. So the trade is worth taking, and because of the zones of confluences and the areas where we are indicating a more bearish outlook on the price action, we could look to safely assume that we are going to A, go short, and B, the trade is giving us enough of a reward and a limited risk that it's worth taking. That if I take this over and over and over again, I'll most likely make money because A, we are seeing a good risk reward, and B, the confluences are in my favor, and C, it's a high probability setup and I'm managing risk, so over time I will make money on this setup because a risk reward of 3.5, 3.8, 4, even 3 is very solid, and you don't need to win 50% of the time in order to make money if you have a risk reward on average of 3. So that's the overall look for the price action in my eyes right now, and we will play it out candle by candle, but I wanted to give you guys a good understanding of why I was thinking short on this particular trade. So let's zoom in now to our execution level here, where we are going to just trade on the 1 hour, and then I will draw in that nice ascending trend line, which is right here. And I will make that green because it is a support zone. And what I also will use is a projection because we do see a little bit of a gap in some of the candles here trying to connect to the zone. So this is what I'm going to do. It's not a huge difference, but it's just showing me where the zone of buyers are instead of a single line on a chart. So I'm not going to do anything until we see more of a confirmation. Now, what I also do see is this level of support right here. Now, it's wider if you wanted to make it wider, but I'm going to keep it pretty narrow compared to where the body of the candle was right here, where we see the wick here, we see a wick here, which turns into a resistance. Old resistances turn into new supports, and then we've seen that support get held so far so good. So this is the structure of the price action that I have created for the Discord, and this is what we're able to identify for this current price action again. So ideally, with the current price action that we see right now, I'd like to see a couple more touches on the supply to really validate that there are going to be sellers strong enough to keep the price down. Obviously, the apex of the pattern is here, so we could see the price just continue along this way until we see the price hit the apex, which then hopefully the price will break down, and then we could see a retest to validate the new supply zone, and then we're going to see a push back down. So there could be some options here, and what we also could see is the price come up a little bit, crack back down, and then come back to retest as a new support, or sorry, a new resistance. So this is one of the multiple ways that we could see the price action play out. Now, what we don't want to do is enter prematurely, not really seeing a correlation in our entries. What we want to do is to enter at such a precise time that the market is screaming at us to enter. We don't want to enter in these hope trades, which are trades that you are hoping the price to break, but it hasn't confirmed that it's going to break yet. So let's say we enter right here. We have no confirmation of a break in the trend line. We still only have one touch of the supply zone when we are making the trend back up, so we could just see the price continue upwards because the market structure is still going up. So if we are entering around here without a confirmation of a break in trend, we're just hoping, we're guessing, we're not really confirming anything. So we're hoping and not confirming, and that's not good as a trader. We want a confirmation, we want a break in the ascending trend, and we ideally would like a break in the horizontal zone in order for us to confirm that the market shift is changing. So let's continue with our analysis, going one by one. And let's delete these guys here because we don't need them when we are actually trading. But that's the overall plan. We could see a break the horizontal zone, or we could see it bounce off the horizontal zone and then retest this ascending trend line and then continue our downward push. So we are seeing the hold of that zone here. Big bullish volume coming into the market. And it looks like we are getting that second touch of the supply zone, which is going to validate our key area of resistance even more. So let's continue on with our analysis. So this is a huge rejection from the sellers. Look at how massive that red candle was. Although we don't see a tremendous amount of sellers, we do have more sellers in the market than the buy volume if we look very closely. Although within the top part here, we'd see more buy volume than the sellers, which is not ideal. But we see the rejection here from the price action. And remember, I value price action more than volume. And for me, price action is king. Market structure, price action is going to be the number one thing for me to look at, where volume is going to be a secondary thing that I do pay attention to, but isn't going to be the make it or break it situation for me. So let's continue on with our analysis. So we are seeing the price hesitate at that support zone, and we are seeing the price break below this zone. We see right here, the candle did close at the zone, but the next candle came right back up above the trend line. What we're seeing here is, although the price had closed below the trend line, the next candle was a confirmation of a break because we saw a further drop down below the trend line. And let's continue on with our analysis. So here is the first pullback to validate that trend line. What we could do is have a little feeler position, which is going to be maybe 10 or 20% of a normal position to get a little bit of a foot in the door, let's say. So we're not going to put our full position in because we don't have a very solid confirmation of a potential shift in trend, but we still see a validation of a new resistance, so we could enter here as a feeler trade. So I'm not going to actually, just because this is an example, but this is a point in time where we could enter a small amount and then slowly add in once we see the price start to move towards the opposite direction. So let's continue on here, and we are seeing a nice bounce off that zone, but the buyers are still present because we see the wicks here protruding out of the bodies of the candles, and we aren't seeing the closes at the bottom. So for me, there's still buy volume in the area, so there's still chance for the price to retest on the highs right here. So we are still seeing the push up. Not a lot here, and we see the touch type A right here, so it's looking pretty good for a potential entry now. We see a validation of a resistance twice now, and it's not going past it above the zone. So for me, it's looking even more and more evident that there's going to be a short opportunity here, and we hypothetically did take a feeler trade right here, and then as time goes on, this is looking even better for a full position trade. So let's continue on with our analysis. So we did see a break, still holding that zone. There's a huge bullish candle right here. It really opened right here and closed right here. Super bullish volume for the price action right here, but look at the volume. We see no buy volume coming into the market. This, for me, is going to be a key retest because of the volume. We're not seeing any buy volume come back up, and it's kind of odd because you see so much movement in price, but you're not seeing any buy volume coming in. So this is just the sellers letting off a little bit, waiting for the price to come back a little bit further before they absolutely attack and push the price back down. So this is not really buy pressure, but it's just easing of sell pressure. And then what I'm expecting is, because it's easing of sell pressure, the sellers are waiting for the price to come back higher and getting a better entry before slamming it back down. So this is the potential perfect entry for us, and we did enter a feeler trade right here, but this is going to be the key level for us to potentially short. Now, because we're using the hour chart, I'd ideally like to see a confirmation of some sort, maybe a little doji here, a little wick up, and then closing right here, which would be a reverse hammer candle, but something that would indicate that there's sellers in the market, because now the trend is up and I'd like to see some sort of sell pressure, so then it confirms the rejection so it doesn't keep on going upwards, so I'm able to confirm even more that the trend is going in my direction before I enter. So let's do one more candle here. And this for me is the key rejection. We see more sell volume than buy volume come into the market. We see the price try to break the zone, but we see a rejection closing below the open of the candle. So this for me is going to be the entry signal. So this is going to be the entry. And then the take profit is going to be at our support zone right here. And then our stop loss, we could split our stop loss because we have a pretty high stop loss zone right here. So I think for me, the first stop loss zone is going to be just above this area right here. And then what we could do is split our stop loss. So we have a portion of our stop loss get triggered if it passes this zone right here. And then the rest of the stop loss gets triggered when it passes this zone here. Now, the only reason I'm doing this is because there is still a chance of the price continuing up a little bit, creating those wicks out of the pattern and still dumping down. And I don't want to get completely taken out of my position. I don't want to get triggered out too soon. So that's why I'm going to split my stop loss, where I have one at the 2346 range and then one at that 2323 range there. So I use this method pretty often by splitting my stop losses. I don't do one single stop loss. I do sometimes, but this is a really good method for giving the price a little bit of room while able to limit your risk. So let's continue on with our analysis. We now have a full position entered here with the stop losses set, and we are good to go. So let's continue on with candle by candle. We are seeing a continuation from the sellers. And then this is the key zone that we want to pass in order to confirm that shift in trend. Because if we're sticking above this zone, we could consolidate in here a little bit. But once we pass our structure low, which is right here, we're going to see a huge shift down. Still holding on, and there is a structure low. Let's just take this so it's a little bit easier to see for both the sell and buy. So once we have closed below the structure low, we're going to expect a continuation from the sellers because all the stop losses from the buyers are now closed out. The sellers have confidence and they're showing their strength by pushing the price below the structure low, and then the momentum is now going back down too. So now I'm expecting to see some more sells. And there is the huge sell volume continuing the momentum. Now this, don't think touched my actual take profit because it's right here, but it's very close. And when we see such a strong amount of sell volume come into the market, I'm expecting some level, even if we do consolidate right here for a little bit, some level of a last leg down to hit my demand zone because we see such a strong level of sell volume in the market. So let's continue on with our analysis here, and we're seeing that nice correction back up. And there's not a whole lot right now, and we are seeing more buy volume come into the market. And sellers rejecting it soon after. This was a touch, if we look here. This sell zone was from the previous resistance, which turned into support, which was a previous support. So this is why the rejection right here happened. Not exactly why, obviously, but when we see these pullbacks on these huge downtrends, you don't want to be worried. You don't want to be sweating, because it happens very often, and just by looking at even the buy volume, we can see that there's not a lot of buy volume with this bullish push compared to the sell volume that occurred. So this is still a very healthy downtrend, and you get these bullish pushes in the bearish downtrends very often. You don't need to be worried about them. You don't need to be worried about a potential move up until you see the continuation from the volume, or you start to see higher lows and higher highs start to emerge. If that happens, then you might want to be looking to take profits off the table. But with these little pushes upwards, I'm not too worried because I don't see a lot of continuation with the volume. So we're not seeing a whole lot of movement, still seeing that downtrend, and we are seeing a base get created right here. So right here we have our base of the recent structure low, and that's it right there. And if we do break the structure low, we are going to see the last zone of the demand zone right here get hit. And if we do break this zone right here, we're probably going to see another retest of this zone. So let's say that if this was a trade, I would put my stop loss right here. because then I want to capture profits and I don't want my stop loss to get hit here. But we could see a wick protrude out of this zone and come back in. So I think this wick right here is going to be my take profit. So I'm going to put it right around here. So let's see the price continue, and I'm just going to delete this because it's a little bit hard to tell with the current price action. So let's just put in our supply zone, which is right there, and this is the current market structure. So that is where it is right now. We're live at this point where we're not in record mode. So let's say if I was in the trade right now, I would definitely be looking to hold until the demand zone gets hit right here. We see that it has shown to be a level where we could hit in the past, and if anyone did have any stop losses around this zone, it would have got triggered from here. So there's a lot of room for the price to breathe because we have hit it recently, so I'm expecting the price could easily hit this zone again. So if the price does come back here, and if it doesn't hit our take profit, but it hits the low of the wick right here, I would consider selling because this isn't that much to work with in terms of the amount that you'll get from, I guess, where the take profit is to where the wick is. So less than 1%, right? So are you really going to potentially lose a winning trade with 0.4% still on the table? Well, most likely not. I wouldn't. If it's so close to the take profit, yet it's not hitting it, I would just take the profit. And that's only if I start to see the market shift, start the trend. Like right now, we are still seeing a lot more sell volume than buy volume right here. So that for me is an indication that the trend is still going to continue downwards. And we are seeing a very solid resistance get hit with not one, but two touches. So for me, there's still a level of resistance that could push the price down to our last level of demand zone, which is going to be that $2 range here. And we still see more sell volume. So for me, I would still be in this trade. But let's say, for example, we're starting to see lower highs get created, and we start to see the higher highs start to get created too, where it's not a sideways zone, but it's creating an ascending zone. At that point, I would then look to potentially take some profits off the table, and if that is accompanied with more buy volume than sell volume, that for me is a very good indication that I might want to actually take profits off the table, because there's not just one indication, but there's two indications of the shift in potential trend, and because the wick hit the demand zone, although we didn't see a long consolidation of the zone, the wick hit the zone, so there's already a confirmation that we've touched this area. But because I already said of the volume and the support, the resistance, I'm still looking to short. So that's my analysis for QTUM. That's why I took a short, that's why I entered where I entered, and that's why I took the trade the way I took the trade. So hopefully you got something out of it. Hopefully you understood why I was looking short, why I was using market structure to determine which way I should take the market, and how I identified a potential entry in order for me to not have any potential drawdown, or limit my drawdown. Because there's always going to be times, like let's say I entered here, the price could really just continue on sideways here for a long time and then absolutely drop. So that's a potential that could have happened, and then my drawdown would have been a lot longer, and I can't control that at all. All I can control is my entry, my exit, and trade management. And in this way, this is how I'm going to manage my trades, by looking at all the data that I have available to me and then making an informed decision using logic, not emotion. So I really hope you guys liked this analysis. I'll try to be posting a lot more on the YouTube channel. This is going to also be in the Discord as well. But the YouTube channel is really exciting. It's a new way for us to produce videos for our followers and subscribers. So I really hope you enjoy. We also do interactive TA. So let's say you are looking at a longer term chart. If it's a really short term time frame, it doesn't really work because by the time I do it and produce it, the trade is already passed. But let's say you're looking at the 4-hour daily, kind of that stuff. You can actually let me know what you think would be a good technical analysis on a chart, and then I can do one for you just to compare what you think and what I think. It's a great way for traders to understand how each person trades a little bit differently. And obviously there are some things that we always want to have structured and the same, like our key levels of supply and demand. But if you're looking at potential entries, trend lines, retests, all that stuff, it's a little bit different from person to person. So I do like to analyze pairs from other people so I can see how other traders are using technical analysis to capture profits for them. So hopefully you guys enjoyed it. And as always, happy trading and have a great weekend.